This video is going to cover how to record a property sale, and specifically a long-term property. So we're going to use the balance sheet method on this one. Let's take a look. So I'm going to start here with a settlement statement. This could be a HUD-1 or an ALTA or any number of types, but they're going to have the same basic types of components. So, of course, it has the buyer and the seller side. We're just going to focus on the seller's side for our purposes here. Let's look at the balance sheet as it stands now. So this is at the end of the prior year. And specifically, we're going to look at fixed assets. So we have our buildings, we have depreciation, our improvements, and our land. So remember that buildings and land are separated because land is buildings are depreciated, land is not. Capital improvements can be amortized. We're not doing that here. And then the other relevant item is this loan here for the property. Okay. So let's look at we'll leave this open here and let's go ahead and enter our journal entry for the sale. And let's say this sale is on New Year's Day, 2025. Good way to start the year. Okay, so we're going to walk down the statement, but first of all, again, we're using the balance sheet method, so we need to clear the fixed assets off of our balance sheet. So we need to look at those. And of course, these are booked at purchase cost. So we know that's on the books at $400,000. Fixed assets have a debit balance, so we need to credit it. And we should be using classes if we have properties. This is 123 Main Street. We also know that we need to clear the land. Okay. And that is $50,000. Same property address. You could do all the classes at the end too at once. Let's see what else. We have our improvements, right? And that was $100,000. To clear that. See what else we have. And we have our depreciation. And that was $50,000, I think. Yep. Actually, I think it's going to be going this way. Okay. I'm just going to test this just to see where I'm at so far. It's a test. Save. And let's look at our balance sheet. Just to make sure we accomplish what we want to accomplish. Now, this is run for last year, so let's actually let's do a comparison. So we'll look at the end of last year and then New Year's Day, because we know that's the a new transaction. Okay, so we go in our buildings from 400 to 0. That's great. Looks like I made some mistakes on my entry here. Our land went to 0. That's great. And did I put 10,000? Oh, yep. And I went the wrong way. Community depreciation was only 25,000, and I went the wrong way with it. So should be this way. Let's just do this as a test again and refresh. And this is a good report to get comfortable with and save this comparison. Okay, so you can see buildings are at 0, community depreciation is 0, CapEx is 0, land is 0. Great. So get rid of this placeholder. Okay, so next, let's look down at what we need to clear out here. We got property taxes. Of course, we would have already had this count, but let's just go ahead and put it in here. And if we were using the P&L method for a flip, that would be a COGS, but we're using the balance sheet for long term. So property taxes, we can separate. This is city. Again, we're gonna always allocate the class. If there's only an online subscription or a plus, not advanced, then you could use customers instead of class. 3,000. And what do we have there? These are county. Okay. Actually, we're going to credit these because these are credits. They're prepaid, so this will reduce what's already been expensed. Okay. Let's look at selling costs. This would have already been there, but again, I'm just adding them as we go. Okay. And let's see. Yeah, it was $50,000. Separate this out. Yeah, that's commission, right? Yes, commission. Just put that here so it's clear. Probably want to see that separately. And separate out another line. Yep. The rest of those, we can just lump those all together. Simply transfer taxes, other. Okay. What else do we have? Our loan, right? Paying off our loan. Originally, we took the loan out for 400. Now let's say it's 300. So of course, what we don't have here is accounting for those loan costs, interest charges. That would be on the P&L. But we're just conserving the balance sheet for this training. This is the loan payoff. And what do we have on here? Property taxes. Oh, back to the loan. Of course, that's a credit balance, so this is reducing it. And let's see. What else do we have here? The 300,000. Okay, and then cash to borrower at 595. So this is what is going to our checking. That's a debit. Okay. I think we have everything here. Yep, taxes. Appreciation. And costs. Yep, and we could close out our loan here, but let's just do this first. So let's look at our again, we're using the balance sheet. So, oops. This in income. Okay, so that's our gain. Now that's not necessarily our net profit. Of course, we need to use the P&L method for that purpose to be more accurate, which is an advantage of it. But this is our balance sheet method. So let's look at this sale now. We already looked at clearing the fixed assets. We're going to see something here with the loan. I'll show you. So everything's cleared, but then our loan, $100,000 balance, right? So let's look at our, oops. Let's look at our journal entry. And let's say we did a journal entry here, and Okay, so this would have been, of course, paid as we went, but we're just going to adjust it here all at once, as if we paid it all out of the checking at the end of the year. Okay. Pay and close. Now let's look at our balance sheet. And now our loans at 0. And let's look at our P&L and see how that's affected. So the only thing that hit our P&L using this method is the gain here. Okay, and we know, again, that's not necessarily our profit, because we didn't take into account particularly debt service. That would be one of the items, a big one. And there could have been other costs. So that's why the P&L method is better for that, capturing all those. But again, if we're booking this using the balance sheet method, saying this is a long-term rental, not a flip. And so that journal entry is done. Okay, so that's how to book a property sale. That's the balance sheet method, the journal entry method for a long-term asset. Call that a rental.